All right, so let's begin. Today we're going to talk about swing trading, the Forex market. And as you know, the last couple sessions we've had, we've kind of done a combination of talking about the spot Forex market and the Forex futures. And I kind of mentioned that I would say pretty much all the, I think it's fairly accurate to say that for myself, all of the day trading that I do in the Forex market is done in the Forex futures. Remember, all the short-term trading that I do is done in the Forex futures. Okay? But today we're going to talk about swing trading. So, yeah, so swing trading, you know, it's a little different story. You don't necessarily have to go to the futures to gain some of those advantages that we talked about, right? Spot Forex market is okay for most people there. So let's jump into that, okay? But I want to start with maybe a quick, maybe 10-minute lesson before we get into the charts, okay? Right? Because just jumping into charts and doing the analysis is great. We're going to do plenty of that, okay? Let me get that up for you here just a second. Okay, we're only actually going to go over two different slides here, but we're going to spend time on them. Can everybody see that slide okay? I want to make sure. Okay, great. Okay. By the way, I always do this at the end, and it's always a problem because people ask for it, but let me just do this right now. 1 second. I'm just going to type my email address in here. There we go, Seiden@tradingacademy.com if you have any questions. All right, so take a look. So how do we arrive at one of the most frequently asked questions that I get is someone will say, you know, I understand why you took the level you did, the supplier demand level to buy at, but why did you ignore all these other levels, and why did you pick that one, right? Well, again, it's not that every trading opportunity is going to be profitable, right? But we want the majority to be profitable, and bottom line is we want to identify low risk, high reward, and high probability turning points. And for those that are kind of new to the sessions that I do, most of the time we're focused on quantifying real supply and demand in the markets. Okay? So I'm going to take a deeper dive into that here today. All right? The only reason why you are here today is to gain an edge over your competition, an edge that allows you to get paid from people that don't know what they're doing. So let's jump in and do that. I'm going to talk about 4 specific things, and we'll call this call these odds enhancers, probability scoring, whatever you want to call it. Okay? So as we talked about many times, right? These markets are nothing more than, you know, the movement of price in any and all these markets is nothing more than an ongoing supply and demand equation, right? Which means opportunity exists when this simple and straightforward equation is out of balance, right? Okay. Now, how do we know how out of balance supply and demand is at a price level? Now, we can, you know, normally we're looking for patterns that represent where the real buyers and real sellers are, right? That demand and supply. But without being on a trade desk, without being on a trading floor, how do we know how much, you know, how do we know how out of balance supply and demand is at those levels? I mean, maybe it's out of balance a lot at one level, but hardly at all at another level, even if the pattern looks very similar. That's what we're going to talk about here, and then we're going to dive into the charts for the second half of the session and actually do this, okay? So number 1, let's focus on how prices left the level. How did prices leave the level? You should be able to see that there, okay? I see someone's having trouble with the screen, so let me capture it one more time for you. There you go. Everybody should be able to see it there. Okay. So how did prices leave the level? So number 1 here, how did prices leave the level? Okay. We want to focus right here where I'm pointing. The initial move away from a cluster of trading. All right. So remember, supply and demand appears to be in balance here, but all of a sudden, there's a strong drop in price, okay? All right, yeah, you should be able to hear, okay, Rafa. Prices drop away from this level. So the rule is for this first one, okay, and again, the whole goal here with what we're doing, is we want to quantify supply and demand in here by looking at candlesticks on a chart, without looking at order flow, without looking at news, without looking at anything. How out of balance is supply and demand? Because the more out of balance supply and demand is at a level, the better the opportunity. So, okay, Jenna, just kind of the short version of all this, the stronger prices move away from this level, the more out of balance supply and demand is at the level. Okay? So prices can move away from this level in one of three ways. It can be a gradual drop in price away from the level. It can be a stronger move away from the level with maybe big red candles, or prices can be gapping away from the level. Out of those three choices, which one represents the strongest supply and demand imbalance out of those three choices? Right, the gaps. Okay. Now, we're not going to get a lot of gaps in the Forex market, and that's okay. Okay. I mean, we'll get those on Sundays, so watch for those gaps. But this is probably the second best choice. Look at the strong move away. So again, understand that prices had to move away in strong fashion because supply and demand is so out of balance here. So that's something we want to look for. In other words, if you have a level where prices make kind of a gradual move away from it, yeah, it's probably okay, but not great. If there's a strong move away from the level, we want to pay attention. Okay, so that's number one. Number two, how much time did price spend at the level? Okay, now all the books and theories out there say that you want to see a lot of candles at a level. You want to see price spend a lot of time at a level, and if it does, that's probably a good level. I would argue that the opposite is true. Okay, so what I'm getting at is, and let me kind of do it through a series of questions. All right, at a price level where supply and demand is out of balance in a big way, are there going to be many trades? Are many trades going to take place at that price level, or a few? Are you going to have many or a few? You're going to have a few, exactly. Right, good job. Okay, so if you have few trades take place, few transactions, are you going to have, lots of many candles or few candles? Obviously, you're just going to have a few candles, right? You're going to have less candles, right? And not that volume plays too big of a role in Forex, but, people look at volume, I think, the opposite of how it really is. People will say, well, you want to see big volume at key levels, at key turning points. Actually, the opposite is true. At price levels where supply and demand is most out of balance, you're going to see very little volume, right? Right? You can't have a lot of transactions when you have a big imbalance. So, the bottom line is we want to see very few candles here, not a lot of candles, okay? Focus on the price levels where prices can't stay at very long and have to move away in strong fashion. And then understand exactly why that is. It's because of a supply and demand imbalance. Number three, levels on top of levels, okay? We want to look for that. I think there's an example here. Yeah, let's look at this one. This is kind of taking us to, here, let me grab it for you. Here's another example here. Now, this is not a Forex market, but that's okay. It's just an example for you. So notice here, we have the pattern that represents supply. Rally, base, drop, and then another little supply level here with a gap down away from it, right? Supply level on top of a level. So when you have levels on top of levels, that's important information. In other words, if you have something valuable and you take it to the bank, but this time the bank you're going to doesn't have one like steel vault door, they have two, right? Right? Like double protection. That's the same logic here. Instead of shorting right here against one supply level, you're shorting here against two big stacks of sell orders, right? Okay. All right. Does that make sense? Now again, where do I get all this information from? It's just experience. My experience started on a trading floor. Again, I had lots of orders sitting in front of me, stacks and piles of orders. And as you went up the price ladder here, okay, the stacks of sell orders got bigger and bigger and bigger. And eventually you get to a point where at every price point you had a giant stack of sell orders. Well, that's exactly what you want to sell against when you're selling short in a market, right? So the last question, the only remaining question is, what exactly does that picture look like on a price chart? Well, it's right here, okay? That whole levels on top of levels concept, all right? Do you have to have that? No. But if you have it, it's something to pay attention to. It's probably a higher probability level, okay? Now, let's talk about the last one, okay? And remember, for those that came a little bit late, we're running through these. This is how, these are, 4 of about 10, I wouldn't say 10, I'd say about 8 different things that we can look at to help qualify and quantify your key supply and demand levels. That's the biggest question I get out there ever. People say, well, I understand why you took those levels, but why did you ignore all these others? Well, because the answer is because those others didn't meet the definition that I'm looking for, right? We want to focus on low risk, high reward, and high probability turning points. Okay? Jose, yeah, the short answer there would be yes, because you don't have a profit margin. And Jose, this next one, number 4, is talking pretty much about that. So let me know if you have any other questions after this one. So number 4, how far did price decline before returning back to the supply level? So this number 4 hits on 2 important things for us: probability and profit margin. 2 things we definitely want to have, especially that number 2. Okay. So what we're looking at here is once price left the level right here, how far did it travel before returning back up to the level? So once prices left the level, how far did it travel before returning back to the level? Okay? The more that it traveled away from the level before returning to the level, the better the opportunity is from a probability and profit margin perspective. Here's why. Okay? And just a side note, the reason why I don't just only focus on like, hey, look for this pattern and trade it, because if you don't understand what the pattern really represents and it doesn't make logical sense to you, it's just never going to work, right? At least that's my experience. So, understand exactly what's happening here behind the scenes, okay, from a real trading perspective. Once prices are falling from this level, the sellers that are doing the selling here, okay, are doing all the kind of the dirty work for us. They are absorbing all the significant demand on the way down, okay, and they're able to do that until they get to this point right here, okay, all right? So what that's telling us is when prices come back to this level for our short entry, remember, we've covered this many times in here, the rules for getting in and where our stops are and stuff, but so we're selling short here. When we sell short here, okay, we expect prices to move back down quicker than they did over here, right? Or at least down to this low. This becomes pretty much our initial profit margin or one of our targets for sure, right? Okay? Remember, these sellers absorb a lot of the significant demand so that when we sell short here, right, there's not a lot of significant demand left. That's the whole point. It's like the snowplow effect, right? We want to go down the path where the snow has already been plowed away, not the path where it's kind of fresh snow, right? Unless you're skiing, of course, then it's a different story. So that's the profit margin side of things. Now, what about probability? Why does it become higher probability? Well, again, the farther price moves away from the level before returning back to the level, okay, that makes it a higher probability opportunity because when we sell short here, in this case, we are selling short to a buyer. Always remember, one of the things I always talk about is focus on who you're trading with. Understand who's on the other side of your trade. So when you're buying here, in this case, not only are you buying from someone who's making those 2 mistakes, right? Buying after a rally in price and right into a price level where supply exceeds demand, but here we're selling to that buyer, right? So here we're selling to the buyer who's buying after a big rally in price, okay? So in other words, we're selling short to a buyer who's making a huge mistake. They're not just buying after a rally in price, they're buying after a really big rally in price. And of course, into that supply, right? Let's see. Let me just read back here, make sure I don't miss anything. How about the demand level at 137? So I think you're saying right here, Jose? Is this the one you're talking about? Because remember, we don't have an entry. Yeah, you mean this could certainly be a target, okay? But ultimately, we probably expect prices to come down here. But yeah, there's nothing wrong with making this a target, okay? Okay, and again, even if you make that a target, you want to make sure that it's at least 3 times the distance of your entry to stop, right? Okay. Yeah, VAM, one of our odds enhancers that I didn't put up here is definitely trading in the direction of the big picture trend, right? Okay, we certainly want to do that. We're never talking about completely just trading against the trend. We're talking about buying pullbacks to demand levels and uptrends, selling rallies to supply levels and downtrends, okay? I think one thing we kind of do a little bit different from conventional wisdom, which gets people maybe a little confused sometimes, is that when the trend starts, we're using larger time frame supply and demand levels to make sure that we're in when the trend begins before it's an obvious trend to everybody else. Again, that's the whole key to grabbing the edge, right? Okay. Let me make sure I didn't miss anything. All right, I think we're all caught up there. So these are four of a few kind of odds enhancers we look at. Remember, everything, all the information you need to know, kind of that the market maker knows, that the floor trader knows, anyone that's really watching the orders and facilitating the order flow, even the exchange, right? Most of that information, it's all here in the price charts if you know what you're looking for. And to see that stuff, that means you can't be looking at charts the same way everybody else does, right? It's you can't look at charts. I mean, you can if you want to, but looking at them through the eyes of conventional technical and fundamental analysis, that's going to get you, that's the average way of doing it. That's going to get you average returns, which are nothing but losses. So be careful with that. All right, let's jump out to the live markets here. Let me pull those up and just a second. Hopefully this is helpful. I always try to take things to another level here. Let's get to the charts. Okay, so I don't really care what market we look at. We can start with the euro. It doesn't matter. Okay. Okay. So, gee, I see your question here. Sometimes the rally to the supply level hits the stop loss. Yeah. So sometimes you'll see that sometimes someone will say, it ended up doing what I thought it was going to do, but it stopped me out before it did it. It just pierces through the level a little bit, right? Does that happen to anybody? We can talk about that for a minute. Okay. Well, I'm sure it does. I mean, I kind of know the answer to that question, but yeah. So there's two things you can do with that. Number one, if you're only short-term trading, part of that I think is going to be a function of the spot Forex market, which means you'd probably want to consider trading Forex futures. But the other part is you have to make sure you pick levels that are far out on the supply-demand curve. You always want to be trading at the extreme. Okay, you always want to be trading at the extreme. So if you pick levels near equilibrium, they're probably not going to work out that well. If you pick levels on the wrong side of the curve, it's going to be difficult. But if you follow some of these odds enhancers and then focus on the others, picking the right levels, that's key. Okay. All right, let me just let's take a look. Someone said, "What's the win ratio with this strategy?" Well, that really depends on. You probably have to look at a number of different people to get a range, because not everybody, the people that take the right levels, obviously do very well. The people that don't, will do poorly, because a lot of people say, "Well, prices go right through my support and resistance levels." My answer to that, after a little bit of conversation, is always, well, your definition of support resistance is very different than mine. You know what I mean? And that's really why I don't use the word support resistance too much, because everybody's got a different definition of support resistance, right? To one person, it's a moving average. To someone else, it's a pivot point. To someone else, it's a Fibonacci level. It's like everybody's got a different definition of support resistance. So, okay, let's move on here. Let's see. Yeah, Jason, I saw a couple questions on the dollar index, so we can take a look at that first. Let's do that. Okay, let's pull the dollar index up here. Let's start with the weekly chart. I'm assuming you can see me kind of change these time frames here. I'm sorry, I thought the microphone was on. Sorry, I was just saying. Given where the dollar has rallied to, okay, we're coming into a situation where, based on those odds enhancers we looked at, we're coming. We're not here yet, but soon we may have a situation where we're into an area where there's levels on top of levels. Okay. All right. So let me break this down to the daily here, so we can get a little more precise. Okay. And of course, the way that we do this, now be very careful that you do it the right way. Hopefully you can see my pointer. We want to start with current price, which is right here, right? Okay. And we want to go left and higher to find our nearest area of supply. So we go left and we go higher, okay? and we come up to this kind of big cluster of trading right here. So let me move this over. We'll wrap some lines around this, and here we go. Now remember, there are very specific rules for how we draw our lines, right? So we want to make sure we follow those. I'll just put some lines in here just a second, then I'll grab this chart for you again so you can see it. Okay, there we go. Okay. Yeah, I see someone said the chart takes some time to update, and yeah, on my end, I'm on a pretty good connection today, so it shouldn't be too bad. If you're on a strong connection, you should see it pretty quick. So now let's do something here. Let's take a look, and let's go back a little bit more. Watch this. So when I scroll back and to the left, let me scrunch this up a little bit. Okay. Can everybody see this chart now? All right, so look to the left of this supply level that we just drew in. Okay. Notice this whole area right here. I want to talk about levels on top of levels. Okay. All right, does everybody see that? So once we, let's say you came up to this level that we've identified and the prices kind of hang around and go through it. I'd be surprised if that happened. But even if they do go through that level, look what's sitting up there. There's just more sellers and more sellers and more sellers. Okay? Given the rate at which price is advancing right now, let's go back over to the right. Look at how fast, how kind of straight up this move has been. Okay? I mean, are these consistently profitable buyers of the U.S. dollar right now? Or are they probably consistent losing market speculators? Well, look, they're buying after a huge rally in price. Okay, not a great idea. All right, so let me put this chart back to normal. So again, I would say that the dollar has a little room to go. Has some more room to go. But once it gets up to the kind of 88.50-ish area, right? All right, now the charts are lagging a little bit. All right, well, it's really kind of that mid 88 area is where that level comes in. And again, if you look to the left of that level on the daily or weekly charts, you've got a bunch of levels over there. Okay. All right, no problem. Yeah, it looks like there's a big lag there. All right, so that's the U.S. dollar index. So if we've got some supply in the U.S. dollar, we should probably look for some demand in the euro, right? Okay. Now, let's start. Remember, we're talking swing trading today, which is one of my favorite kind of topics because I'm a big fan of swing trading the Forex market. All right, so remember, coming into some supply in the U.S. dollar, we expect the euro to have some demand, right? Looks like we already touched that level. Okay. So Boyke, that's like the $1 million question right there that you asked, and again, that's what I've been saying kind of all session is that's what separates the people that do very well from the people that don't, and it all comes down to the ability to quantify that real supply and demand, right? And again, to do that, we dive into those odds enhancers. We talked about 4 of them today, and you want to look at things like that. Okay, there you go. Yeah, the pound. Yeah, that was the pound was about as clear as you can get. Maybe this is kind of the euro, opposite of the euro. We'll see here. Okay. All right, let's move on. So we've got euro, we've got the dollar, and we could probably tighten that level up. Let me go to. Well, I think we'll leave it. I think we'll leave it at that. Okay, and that's kind of the opposite example of this Aussie. Does anybody remember the Aussie? We've been kind of planning this Aussie out here for a very long time, and this thing is finally really starting to pay out. This one, right? I've been getting some emails from some FX Street people that have been playing this Aussie, and it took some time, but now it's playing out. All right. Everybody see the monthly Aussie chart there? Just that rally up into supply. You see the chart? Now, let me just tell you though, there's when you start doing it this way, when prices rallied up to this level, while people, I think, were listening, were looking at the level and saw the opportunity for the shorts. It took a long time. What do you think? I always get emails saying, they're usually pretty polite emails, but what do you think the emails were there from the people that kind of didn't agree with shorting the Aussie? What do you think they were pointing to? What information they were pointing to? What was their argument? Right? My argument was obviously, we were into supply and there was a big profit margin on the downside. But what do you think their argument was? They were politely saying, "Are you crazy? Who in their right mind is going to short the Australian dollar?" Right? But what do you think their argument was, though? They pointed to the fundamentals. They said, "This is a strong currency. It's going to get even stronger. Look at employment, look at interest rates, look at this, look at that." And and I agree with all that. There's no one that doesn't. Right? There's no one. I don't think those numbers are not true. But what you have to understand as a trader, especially a swing trader, that conversation of the fundamentals and then how you make money buying and selling anything, those are two very different conversations. So the more you can kind of keep those separate, I think the better you're going to do. Okay? All right. Let's move on. Does anybody have another market they want to look at? I really don't care which market we look at. So, as long as it's a Forex market. And then we'll continue to map out some levels and some opportunities. We've already done the Euro. Okay. Euro Yen was the first one. Chris, we'll take a look at Euro Yen. No problem. So let's take a look here. Let me bring up the chart for you. Okay, there we go. Little issue here. Now, just so you know, with this Euro Yen, there's a black line here, this one up here that I'm kind of pointing to. I can't get rid of that. I don't know what it's from or why it's in there, but even when I click on it, I can't delete it. So it's kind of one of those that won't go away until I refresh the whole system, but I'm not going to do that now. All right, so let's take a look at it from a larger time frame perspective. So when we're swing trading, we always want to start with a larger. We always want to start with the larger time frames, right? Okay. So we start with the monthly chart here, and we really need to scrunch this thing up. This market's really in bad shape. So notice here, we're going to take these a little bit deeper. On this big monthly chart, we're into a price level to the left that we've been to before. So what we assume is that the floor is not as strong as it was before, right? So even though it looks like it's down a lot and maybe coming into some demand levels, we have to be very, very careful, getting too excited to buy because we've been down here before, right? So we'll look for demand, but we're also going to include some supply in there because there's probably room for this thing to fall as well. Okay. All right. Prices are likely to go lower on your second, third, fourth times down to levels. All right. And let's do that here. Why don't we do it on the hourly chart? Now the hourly chart is the smallest time frame that I'll put levels onto from a swing trading perspective. Now remember, to find our area, we start with current price and we scroll up and to the left until we find the pattern that represents the real sellers, the supply, what we're looking for. And that pattern is this, right? Rally, base, drop. So let's do it right here. Right? Okay. Now we want to make sure we get the candle bodies in there and put our lines how we're supposed to put them. And let me grab the chart again so it sticks. Okay. So there's an hourly chart. Now that's a little far down on the curve, right? So, and what I mean by that is if you look at the larger time frame, we've identified a supply level that looks really good according to those odds enhancers, right? Look at how prices left the level. They fell in strong fashion. That's good. The pattern is rally-based drop. That's good. Price spent very little time at the level before moving away from it. Another odds enhancer that's good. Okay. When I scrunch up the chart, you'll see there's other levels that are sitting kind of on top of it, right up here at 116-ish, right? So we've got levels on top of levels. Okay, so we've got a number of these odds enhancers. prices fell pretty far from this level, before returning back to it, which they haven't even done that yet. So I think you get the point there. This level has a lot of odds enhancers in it. The one downside to this level is its placement on the larger time frame curve. It's pretty far down in the big picture curve. So the odds are not stacked in our favor there. Now everything we do at Online Trading Academy is very rule based. So the rule that we're looking at here is the rule that we're looking back at here is when you're shorting kind of too far down on the curve, be very aggressive on your profit taking, right? Instead of going for like 3 or 4 targets, 2 or 3 targets like we normally would, I would consider taking all the profits at the first target. Okay. And let's see, Jose, good question there. Would you trade back up to the level? If there was a solid demand level below, absolutely. Okay. And that brings up another point, a question that a lot of people eventually have. Once you have to understand, once people start doing this and they kind of get it and have some success with it, a lot of them will send an email little ways after that, and they'll say, I noticed that, prices turn at the levels, but prices always go to the levels as well, right? And if you think about it, they have to. This is institutional demand and supply that we're identifying in a market, right? These are the real buyers and sellers, identifying where they're buying and selling. So, prices have to go to those levels to fill those orders, right? So you could certainly trade back to levels. Just make sure you're doing it from levels. And one of the ways to do that is to go down to a smaller time frame if you like. A number of things you can do. Okay, you certainly could trade to the level. The reason why you just wouldn't look at it right now. The reason why we just wouldn't jump in and buy it now is because you need to manage the risk, right? It's all about the risk. So if you see a level up here and you go down to a smaller time frame, okay, and let me do that here. In fact, we'll kind of get off the swing trading talk for a moment. So if you look at this little 10-minute chart here, right? Well, I guess the 15-minute was fine. So you want to identify some demand below this. So here we're trading, where we're at here. If prices fell back down to this area or even this area here, then you're buying a pullback to a demand level for a move back up to that 115 supply. You know what I mean? Okay. You've got to have a way to manage the risk. Yeah, I can refresh the chart, sure. So Alex, I see your comment there. Can you enter halfway and leave the stop loss at the level above or below? Well, the way that we enter these positions, let me blow this one up. And I purposely put this on the one with the Bollinger Bands because I want to add one other thing in here. Okay? So the way that we would typically enter these, the way the average person enters these, is they're going to sell short right there at the 115, right, if that's where your line is. And actually our line should be a touch higher right there. So they're going to sell short on the first black line that comes up, and then they're going to put their protective buy stop just a handful of ticks, in this case pips, above the top line, right? So entering at the level with a stop above the level. Now, not everybody does it that way. Some people will enter part of their position, maybe half their position at the bottom line, and enter the rest of their position halfway into the level with a stop on the other side of the level, right? So, okay. Boyke is asking a question, what percent do prices return to levels? Boyke, I can tell you this, I've never seen a level where price didn't eventually come back to it, right? Now, sometimes the price will come back quick, sometimes it won't. Of course, that is going to be a function of the levels in between, right? You could see that. Okay. Let's see. Augusta, I'm not 100% sure I understand your question. It says, do you class probes very close to, but that don't clearly penetrate the level? I think I understand what you're saying. Yeah, if prices come close but don't meet entry and then move away, so I think the question is, would you take it again? That's what you're saying. Typically, I would. Here's the thing: as long as the profit margin is still there when prices come back again, I'll almost always take that because, that's kind of giving you a little clue. In other words, if prices came back there and couldn't really touch the level and turned away, that's kind of giving you a peek behind the curtain that says, this is probably a good level, right? So, but you have to make sure there's still a profit margin there. That's the key. Yeah, exactly, Van. Major out of bounds, exactly. Okay, so there's euro yen. Let me look back and see. Let's see. Well, target for Aussie. Someone's asked about target for Aussie. I haven't changed that literally, and we haven't changed that in quite a long time. So I think we had a target on a smaller time frame. Let's see. Oh, that's the wrong market. Someone's asking for a target on that Aussie, and let's take a look. So here's there was the entry point on the large time frame, right? Rally base drop, and then we return to that. This was target 1 right here, which was just hit today. Okay. Now why was target 1 here? Because this is the kind of the high point of the origin of this rally, right? Remember, the origin of rallies is where demand exceeds supply. The origin of declines is where supply exceeds demand. Make sense? Oh, please refresh. Sure. Yeah, sorry, it's hard for me to see exactly how slow the charts are. You could probably watch the recording. And again, too, remember these sessions we do at FX Street are try to make them as powerful and helpful as possible. But remember, it's impossible to give all the information that we need to in an hour-long session. And again, we cover all this in detail at Online Trading Academy. So there's plenty of resources on the FX Street website. There's plenty of recordings there. There's plenty of recordings on the Online Trading Academy website and articles that really lay a lot of this stuff out if you ever need more help with it. Of course, you can always jump in the XLT program as well if you're ready for that. All kinds of stuff you can do. Okay. All right, thanks, John. I'll definitely do that for next time, for sure. So there's the target, and that's really target 1, I believe, for that one. So someone wanted to look at Canadian, a couple people. So the Canadian looks like this is a level we've had in for quite some time, down here at the bottom. Not a great level, and I think when we put this one in, I said that I would definitely not take this trade, at least myself, and the reason is because of this. So even though you hit kind of a demand level, this really wasn't a drop-based rally. That's one reason. The other thing is, look at how prices came back to this level. So when they declined into this demand level, let me capture the chart again for you. Right, so when they declined into this demand level and rallied out, when they declined into this demand level, it was just a whole like stair-stepping pattern down, right? Does everybody see that? Compare that. So that's not ideal. We don't like that. Compare that to this. Look at how prices rallied up to this Aussie supply level. Okay, yeah, real bumpy ride down into there. Compare that to this picture. Look at the strong rally up into that level. Okay? In other words, in the Aussie, there's not a whole lot to stop. Look, if you look at the rally into the supply level, there's not much to stop price from falling. The chart shows us that. But in the Canadian, there's a lot of mess in there, a lot of supply in there to stop that rally from moving up. I'll pull that chart back up. And let me see. There you go. So that's a big difference. So how prices came back to the level, that's kind of a big thing there. Okay. Let's take a look. Okay. Yeah, so I'll tell you that in the Canadian. I mean, from a swing trading perspective, I wouldn't say there's a whole lot to do in the Canadian. If this supply gets absorbed and then we come back down to a new demand level, maybe there's something there, right? But outside of that, I'd leave the Canadian alone. The one market that I would really focus on, at least from a swing trading perspective, is that euro. You're getting some key areas there, and of course, as we started the session with today, we want to time that with watch that U.S. dollar index. We've mapped that out, right? Dollar index into supply, euro into demand, and there you go. That's what we're looking for. Let me do one more thing here. And I know it's kind of too late to jump into another thing here, but we're kind of out of time here. But I want to type my email address in there, fseiden@tradingacademy.com. If you have any questions or anything like that, you can certainly contact me, and be happy to help you out. All right. And yeah, this session, like a number of others, are recorded. Find those on the FX Street website. Lots of great information there. And thanks for your time. We'll talk to you next time. I believe in a week or so. All right. Thanks. Have a good day, everybody.